Hey guys, what's up? Hope you guys are having a great day today. My name is Matthew Spositi and welcome back for another episode of the Weekly Market Analysis. So, we have a very interesting thing occur this week. We actually have 10 different currency pairs to go over, but I'm going to be completely honest with you. When I'm looking at the portfolio and all the actual trades that we have going for us, I'm not interested in covering all 10 of them, okay? And the main reason is these videos tend to be very long. I tend to be very long-winded, or at least I can be. And if you don't like that, sorry. This is just kind of the way, this is the way that I am. But one of the things I want to do is I want to try to make these videos a lot shorter. So at maximum, I want to make them somewhere in the 30-minute range. And I want them to really be between 15 minutes and 30 minutes, something of that nature. And I can't really do that if I'm covering 10 different currency pairs. So what I'm going to do is I'm going to handpick a few of those currency pairs, maybe 2 or 3, possibly 4, depending on how long it takes us to get through some of them. And I'm going to actually just talk about those. I'm going to talk about, why I felt that I wanted to cover them out of the 10 and why I thought they were interesting and stuff of that nature. So yeah, that's what we're going to be doing today. And I hope you guys enjoy it. So let's go ahead and hop into the charts. All right, guys, now that we are currently here in the charts, we are on my TradingView profile, the Matthew_Spositi. So this is, for those of you guys who are just joining me, this is my TradingView profile. This is where I take all my trades. I've posted a total of 89 different public ideas. Granted, I'll be honest, I've actually posted a lot more than that, but a lot of those posts got taken away because they were against house rules. And so, as much as that kind of sucks, that is exactly what happened and whatnot. So, it is what it is, but, just don't violate house rules. So make sure you read the house rules, because I thought I had them read. I thought that I knew what the rules were. I violated one rule, and it got a massive number of posts taken down. Was not cool. I did not enjoy that. So just make sure that you understand that. Make sure you understand the rules, regardless of whatever platform you guys are on, so that you don't get hurt and you don't get your stuff taken down. That said, let's go ahead and jump into it. So the first one that I wanted to cover here was New Zealand yen. And the reason, sorry, I'm just trying to exit out on that ad. The reason that I wanted to cover this one was because it was a little interesting. And as you'll see here, normally when you're looking for a trend continuation strategy, what I originally did was I saw that the market was going to broke and violated this structure high, or this structure right here, violated the structure and made a new higher high, higher close. Now, it was coming up against some pretty major resistance over here, and I thought, okay, so if it gets down here to the 618 fib retracement level, I'll go ahead and get long. Well, unfortunately, that didn't work out. As you can very clearly see, we ended up coming and closing below this structure level, this whole structure zone, if you will. You could look at it very much as a zone, and you can draw in the zone like so. Well, we ended up coming below and ended up closing below this zone, thereby violating all of this structure that's right here and indicating to me that we intend to head lower. So I decided to draw my fib retracement tool from this swing high to this swing low, and I got my 618 fib retracement level right here, and that is what I used for my entry, like I always do. The reason I found this was an interesting trade, and the reason I wanted to talk to you guys about it, was because if you'll notice, all right, I didn't actually draw from the highest high all the way up here. And the main reason for why I chose not to do this was because sometimes in trading, that you can see that the overarching trend. So if we look at this move right here, okay, we see that we've made a new structure high. We've broken and we violated this structure high right here. Let's go ahead and draw this in. We violated this structure high right here, okay, and then we also violated this structure high right here. So there's a lot of different structure points that we violated. And even violated this structure high. Oh, nope, wrong thing. We don't want that one. And we also violated this structure high right here. All right. So as you can see, we violated multiple structure highs by closing above each structure, each point of structure. As a result of that, what I was seeing, so if we were to look at this here, and we're seeing that we kind of consolidated sideways, and we started to come down, and you're thinking, okay, I'm going to look for a trading opportunity. Where am I going to go ahead and get, long? Where am I going to measure my fib retracement tool from? That's the most important question. And so where would you measure it from? Well, you could measure it. You have a few choices. You could measure from here. Could measure from here. Could measure from here. And technically speaking, some people might say you could even measure from here. Now, I would say no, because this measurement is this retracement is just too small in my opinion. Although it's very close in size to this retracement, it's still a little too small for me to even consider measuring here. And it's very highly likely that it would get stopped out if I was to measure there. So I would look at these three different structure levels in terms of which one to measure from. Now, you want to, generally speaking, measure from the initial leg of the move, which would be all the way down here at 68.15. That would be the initial leg of the move. That's where the move originally started. We had our initial low, our initial high, a retracement, and then we made a new higher close. So I would say that you should probably measure from here, because this is where this overall leg of the move started. Some people might argue and say, well, no, you see, we came up, we came down, and then we had this big leg. So really the leg of the move started here. You can measure from there too. That's perfectly fine. There's nothing wrong with measuring from that point. But unfortunately, there are times where the market isn't going to get low enough to measure from these two lowest structure levels. And I'm going to show you that right here. If we were to draw the fib retracement tool from the starting point of the leg of the move, from this swing low to this swing high right here, we would need the market to come all the way down to 69.13 just to get the 618 fib retracement level. All right, just to get that ratio, the golden ratio, we would have to, the market would have to move all the way down to 69.13. Now, when you're seeing a really big move like this, do you really think that that's probable? It can happen, but what is the likelihood of it happening? That's really the question you want to ask yourself. And in reality, I'm kind of thinking it's not likely to happen much at all. So what you could do from that point on is you could say, okay, well, I'm going to go a little higher to get a higher likelihood of getting involved. I'm going to go from this swing low to this swing high. And I'm going to wait for the market to come back down to 69.23. Now, first and foremost, this may not be the best example, because what you will realize is that these two structure levels right here are very close together. All right, so as you can, so they're a little close together. Sometimes and ideally you would want to see it a little bit more spaced out. This secondary retracement area, you would kind of want to see it up here as opposed to being so close to the initial leg of the move. But you could measure from there. Now you only have to wait for the market to come down from 69.29, which is, it's a lot less for the market to move to that point than to move lower, but it's not that much farther. Or you could draw a fib retracement tool from this structure low to this structure high. Now the market only has to move down to 69.81, which is much more highly probable to happen. But now you're choosing what I would classify as minor structure, okay? And because this is minor structure, you need to understand there's a higher likelihood of getting stopped out on the minor structure than it is on the more major ones. Now, even on the major ones, you can still get stopped out. So it's important to understand that. Just because it's a major does not mean that you're not going to get stopped out. You still can. But at least in this case, there is an even higher likelihood of you getting stopped out on minor structure. Because unless the trend is very strong, the minor structure level isn't really going to be respected. Now, if the trend is strong, there's a high likelihood, or there is a probability that the trend will respect the minor structure level and you'll be okay. But there is no guarantee of that, okay? So you typically want to look for more major levels of structure in order to identify great opportunities to get involved in the market. And you want to mainly focus on those more major structure levels. But sometimes if you focus on those major structure levels, you won't actually get involved in the trade, which is why I wanted to show you this trade, to show you why I chose a minor structure level as opposed to the major one. And, you know, that's the reason. Okay, so going back in here, you know, ultimately the market didn't really come that much lower, as we can see here. Actually, let's go ahead and draw it in again from the structure swing low to the swing high. The market got pretty close, but it didn't actually hit the 618 fib retracement level when we measured from that structure low, this structure low. So unfortunately, we weren't able to get involved. Now, that said, in this case right here, this is the trade we took, and in this case, you'll notice that I measured my fib retracement tool from this swing low to this swing high, or from this swing high to the swing low right here. I measured my fib retracement tool from this structure point, from this structure high to this structure low. And again, the main reason was because I was concerned that if I had measured it from the swing high all the way up here, ultimately I never would have gotten involved, because the market would have had to come all the way up into 70.86 price, that price level, and that's a lot for the market to move. We're talking about the Forex market. Anything's possible, and high volatility is the mark of the Forex market. Okay, so the Forex market has a lot of different opportunities and a lot of momentum behind it, so it's not impossible for it to do anything. But I was trying to give myself the highest likelihood and the highest chance of getting involved, which is why I decided to measure from a minor structure level, knowing that there was a higher chance of getting stopped out. And we still might get stopped out. There's no guarantees here. Right now, we're a little bit above my entry level. I entered at 70.18, and as you can see here, we're sitting at 70.20. So there's still a chance that we could get stopped out here. We're definitely not decided. The market hasn't decided on what direction it's going to do, but there is a good chance that we could end up, you know, rolling over, and I could end up making money. So, but this is mainly why I chose to measure from the minor structure level. And here's the key thing to take away from this, is that it doesn't really matter one way or the other. Whichever way you choose is fine. All right, whichever way you choose is okay. Just make sure that you back test it, because that's the most important thing. More so than anything else, you want to make sure that you're back testing that strategy. Whether if you're going to be taking the minor structure level and you're going to be trades and you're going to be measuring your fib retracement tool from those, that's perfectly fine. Just make sure you back test it and see how that affects the trading strategy. Maybe it pulls the consistency of how often you win very, very low, and you would win a lot more often if you were to, say, you know, not do that and focus more on the major structure levels instead and cut out the minor ones. So you just have to it's really more of a personal preference thing, but you just really need to understand that and just know that whatever way you do, just make sure you back test it, okay? That's the key thing to take away from here. Let's go ahead and jump back in. Okay, so right now we're kind of waiting. The market kind of came up, gave me my entry level, but unfortunately, I wasn't here when we got filled, so I had to wait. I put this blue line on here to represent where I saw the when I came in and when I saw this move, and I had hoped that the market was going to move down back into my entry zone, if you will, and we did, and we ended up getting short. So now we're just kind of waiting to see what exactly happens, and we're just kind of going from there. So let's go ahead and move on to the next currency pair, and we're actually going to go back to this page. We're going to look at the dollar Swiss here because, well, I deleted it because it was a losing trade. But I wanted to talk about this one as well. Now, I posted this trade even though it was a losing trade. As I updated it here the minute I posted it, that stop had been breached. And the reason why I really want to cover this one is because I think it's really important for you guys to understand that why I post losing trades, okay? I think it's important for you to see the losing trades. I think it's even more important for you to see it just as much as it is for you to see the winning trades. And in some cases, it's even more important for you to see losing trades because if nothing else, that's being transparent. And that's my whole goal here. I want to be transparent with you guys. So I want you to see all the losing trades. So it's just important to keep that in mind. All right, it's important to keep that in mind. It's important to understand that. So in this trade, though, what you can see on the dollar Swiss was that I decided to draw my fib retracement tool from this swing high to the swing low. And this yellow line represents the 618 fib retracement ratio. And, well, we got involved and we went short, but then the market promptly came up here and ended up stopping us out. Again, this was minor structure. If we zoom out here on the charts, you could definitely see that the major structure level was up here. If you want to zoom out even more, which is probably not going to give us any more than this because it's just a trading idea. Usually you don't get to see a lot more, but this was definitely more of a major structure level than this was. This was definitely more mid move, so it was mid leg of the move type of thing. So it's definitely more of a minor structure level, and then this would have been even more major structure level than that one. But unfortunately, you know, I attempted, there's not a whole lot of structure in here for me to take any trades with. So I figured that if I'm going to get involved, I'm going to have to take a minor structure, trade and hope that we'll end up, rolling over. And this is just going to be a very strong trend that's going to come up here, get me involved and then continue on the trade. Unfortunately, that did not happen. And it'll be very interesting to see whether this continues to roll over and my analysis was correct, or whether it's going to continue higher and it's just more or less taking a break by consolidating a little bit or retracing a little, and then it's going to go up. So we'll just have to kind of see how that goes. But I just wanted you guys to see that. I think it's important, again, for you guys to see the winners as well as the losers. And in some cases, I think it's even more important for you guys to see the losers, just so you guys know, hey, this is the way trading goes. It's not all fun and cookies and ice cream and cake and whatnot. It's not all fun. Actually, a lot of it is quite emotional and it's quite tumultuous, if you will. Like it can be very, trading can be, has a lot of turmoil involved, emotional turmoil involved in it. There's always a battle going on within yourself when you're a trader. Do I stick to my trading plan? Do I not stick to my trading plan? Do I trade here? Do I trade? There's a lot of subjectivity, so it's actually very hard to actually enter in the trading rule, hey, I'm not going to take trades at a minor structure level. How do you define a minor structure level? Well, it's kind of subjective. Minor structure level can be 10 pips up, and a 10 pip retracement and then rally. It's subjective. What is considered minor? We can identify minor structure levels with our eyes quite easily. But even what I would consider would be a minor structure level may not be what you would consider to be a minor structure level. Maybe you consider even smaller moves to be minor and mine to be more of a major. Okay, again, that's the thing about trading is it's highly, highly, highly subjective, and it can cause us to have a lot of emotional turmoil. So it's just important to keep that in mind in your trading and whatnot. But let's go ahead and jump into the last currency pair that we're going to go over for today, and then we'll go ahead and end the episode. All right, so the last currency pair we're going to be discussing today, and again, there were lots of currency pairs. Unfortunately, I had to pick and choose which ones I wanted to cover because this would be a very, very, very long video if I was to try to cover all of them. So I really wanted to make sure that I was covering a few. That way, this is still a very educational video, but it doesn't bore you to death with a massive amount of currency pairs. So let's go ahead and talk about the last one, which is New Zealand dollar. All right. So, New Zealand dollar is pretty straightforward. This is a very nice looking trend continuation pattern, if I do say so myself. And in reality, we zoom out, we can definitely see what the market has been doing. We've been bullish, all right? We've definitely been bullish since March 20th, 2020. And we rallied, we retraced, we rallied again, retraced again, rallied again. Closed us ever so slightly above here, I believe, retraced, and then rallied again. So here, in this case, I decided to draw my fib retracement tool from this structure here, this lower structure here, instead of the more major structure level, which would have been here. Again, to try to ensure that I get involved in the trade. Now, this could easily just come up here a little bit and then fall through the floor and stop me out. Again, this is a minor structure level, much more minor in comparison to this one. I mean, and how I define whether a a retracement is minor or major is largely the size of the retracement itself. So here, as you can see, this retracement was definitely much larger than this retracement. This retracement was significantly smaller. And that's how I define what is a major or a minor retracement. So in this one, as you can see, we came up, we made a new structure high. So I drew my fib retracement from the structure low to the structure high right here. Swing low to swing high. And then I got involved at the 618 fib retracement, which was 65.83. And that's what my entry was. And now we're just kind of waiting to see how the market goes. Guys, trading doesn't have to be complex. All right? Trading can be very simple. And there's nothing wrong with making it simple. As long as you have positive expectancy in your back testing and your forward testing, it doesn't have to be complex. It's very important to keep that in mind. You don't have to make it complex, okay? So right now we're just kind of waiting to see what's going to happen. But again, you know, it's subjective. You may decide that you want to draw your fib retracement down here and not up here. And that may be something that you decide to do. It's perfectly fine one way or the other. Just make sure that you're back testing it in your strategy. All right, guys, that's going to be the end of the episode for today. Hope you guys enjoyed this one. I do apologize. I'm sorry I can't show you all the currency pairs. I mean, again, out of 10 different currency pairs, if I had shown you all, this would have been a very, very long episode, and I wanted to try to keep it relatively short. That way, show you guys a little bit of what my trading, what I do on TradingView, and how I analyze the markets with real-time data. But then I also wanted to show you guys and also do some educational stuff for you so you guys can get a good idea of what trading, the realities of trading, what it's really like, and what it's really like to actually have to try to predict what's going to happen and how to play the probabilities and things of that nature. So I thought it would be very, very important to show you, but to show you all 10 currency pairs I think would bore most people. Now, if you guys like seeing those longer videos in that longer format, and you like seeing all those types of currency pairs and stuff, and all of them, you know, sometimes, some weeks I just find a lot and some weeks I find very little. This week was one where I found a ton. I mean, it took me over an hour to find all those, to post everything. It took me a long time to find it. It's not something that happens very, very fast. It takes a long time. But that being said, guys, hey, I hope you enjoyed it. And I just wanted to talk with you guys about the realities of trading, all right? My whole bit here on YouTube is to show you guys the realities of what becoming a consistently profitable trader is really like. Okay, it's not always easy, all right? It isn't. The truth is that when you are trying to become a consistently profitable trader, there's a lot of hardships. I myself actually just had a big major setback in my back testing, okay? I was back testing over the last, a little over 2 years, and I back tested all of the currency pairs that I've talked with you guys about: the Aussie CAD, the Aussie USD, the CAD Swiss, the Euro Yen, and I'm currently back testing the Euro Dollar, the Euro USD. And the Aussie CAD, the Aussie USD, and the CAD Swiss, I back tested from 2010 and got a little into 2013, so a little over 2 years. And then I started back testing the Euro Yen, but I decided that I wanted to know, is the strategy actually showing to be profitable on more recent data? So I decided to backtest the Euro Yen, the Euro Dollar over 2017 and up. And what I've discovered was that the Euro Yen was not profitable, and the Euro Dollar, well, that remains to be seen. It wasn't profitable. It was profitable at one point, then it stopped being profitable, and then it became profitable again. And the whole reason I'm telling you guys this is because I want you to understand the realities of trading. So now what I'm going to have to do is I'm going to have to go back in time step by step. I'm going to have to go back to 2013 with the other pairs and test them from 2013 all the way up to 2020, a good 7 years worth of data. And that will give me a very large data set that will allow me to understand whether this strategy is really successful long term. And I'm going to have to do that not just with the Aussie CAD, but also the Aussie USD, the CAD Swiss, and the Euro USD, if the Euro USD proves to be profitable and actually shows a positive expectancy. I'm not going to try with the Euro Yen because in reality, it's all right out of 100 trades. It didn't even show any sign or a very small sign of actually being profitable. So I'm going to have to go back and I'm going to have to retest it all. It's going to take me a long time. After talking with my trading mentor, you know, this is something that he advised me to do, and I couldn't disagree. The only reason I was avoiding that was not because I was trying to shortcut the system. I was originally taught you need 100 trades per strategy, per time frame, per market that you're going to trade. A market is like one currency pair. So like the dollar yen would be a market. And then the hour chart, the 60-minute chart would be the time frame. And then whatever strategy you came up with, trading on that one time frame, that one market. And that's ultimately what I was told, that you needed 100 trades at minimum or 5 years worth of data. And so what I did was I did the 100 trades because it took less time than 5 years worth of data, at least with my strategy. And unfortunately, I'm now facing the situation that it probably would be best to go and test them all the way up from 2013 onward into 2020. And just to kind of see how the market performed. While that sucks, and I'm not at all happy that I have to do that, it is something I should do. Guys, in the end, I'm treating my trading like a business, okay? And that means putting forth the effort, putting the time in, and now I'm going to have to put a lot more time in than I thought I was going to have to before, and that's really, really demoralizing and depressing to me. I don't know about you guys, but it's really, really depressing. So now I'm going to have to go back and continue testing on more and more data and see whether or not the strategies are actually profitable long term. And that's going to be very hard for me to do. I'm not going to lie to you. So guys, I just want you need to understand that trading is not some hobby, okay? Trading is a business. There's a lot of work that goes into trading. It's not, you can't just come into the market and trade and expect to be some consistently profitable trader overnight. That is not the reality of trading. The reality of trading is a lot of hard work that can take months, if not years, to master the craft. Okay? It is a skill. And like any other skill, it requires a lot of time, a lot of effort, and a lot of practice. You wouldn't go try to become a professional basketball player, okay? I've used this analogy before, but you wouldn't go try and become a professional basketball player by shooting a few hoops and then saying, okay, I'm ready to go pro, right? I mean, who would do that? You know, nobody would do that. You would ultimately practice like Michael Jordan over and over and over and over again until you become proficient, until it becomes muscle memory. And you would just become really good at shooting hoops. And then that would just be one phase, one small step in your journey to becoming a professional basketball player. Then you would learn how to do a whole host of other things. Just because you know how to shoot doesn't mean you know how to dribble. Just because you know how to dribble doesn't mean you know how to do fake outs and how to actually, dance around other players and stuff of that nature. There's a lot that comes into being a professional basketball player. Okay? It's not, you wouldn't go into any sport, play a little bit, and then automatically assume that you can go pro now. I think a lot of the reasons this is the case with trading is because trading seems so simplistic. It seems so easy. So people come in and they try to just do that. But in reality, while it is simplistic, it's not easy. You got to treat it like anything else. Okay, you got to treat it like a business. It's going to take time. It's going to take a lot of work, and you're going to have setbacks, and it's going to suck. Let me tell you, it's going to suck when you have those setbacks. But it is what's necessary for you to become a consistently profitable trader. If you're really interested in this, it's going to take time. The more freedom you have and the more free time that you have during your day is going to make it a lot easier. Okay, it's going to give you the ability to put a lot more time into it. So you might be able to do it all within a couple months, maybe even a couple weeks. If that's like literally all you do and you never like leave your office or you never leave your room or wherever your computer is. But in reality, it's going to take time. It's going to take a lot of work. And the more data set you have in your backtesting, the better off you're going to be as a trader. Okay, you're trying to, when you try to go and you try to acquire a new skill, you got to put the odds in your favor. You put the odds in your favor by testing, by doing the necessary amounts of work. That's how you put the odds in your favor. Okay? So you got to set yourself up and start from a position of strength. This is how you do that. Okay? This is how I'm doing that. So guys, that's going to be it for this episode. I hope you enjoyed it. I very much enjoyed making it. That being said, guys, hey, if you want to become a trader, okay, if you want to become a professional trader, you want to become a consistently profitable trader, then go to tier1trading.com. Guys, tier1trading.com is the best place for you guys to go. You have great mentors there from Akil Stokes, Jason Greystone, and Charles Miles. These guys are not going to turn you down the wrong path. They're going to set you up for success. They're not just going to teach you one strategy. They're going to teach you the art and the skill of trading, okay? They're going to teach you how to read a price chart. They're going to teach you how to do money management, how to create a strategy, a trading plan, how to create a trading journal. And then they're going to teach you how to analyze the markets and how to identify different patterns. They're going to teach you advanced pattern formations, which are absolutely amazing. They're going to teach you a whole host of things, guys. So if you're interested in all that, guys, go check out Tier 1 Trading. They're an amazing place. By far, in my opinion, the #1 place for you guys to go to become a consistently profitable trader. And hey, if you are into trading and you really want to learn more and more, then you need a great charting platform, right? The best one to get to for you guys is TradingView. In my opinion, my most humble opinion, TradingView is by far the best trading chart platform out there. It's very easy. You can access it on the on a web browser. You can access it on the app. It's super easy to use. It's intuitive. Honestly, I've had an easy time using it. I've used other trading platforms, and to be completely honest, this one is by far the easiest and the best one to use. So if you guys are interested in getting a good charting platform, go check out tradingview.com. I'll put all the links in the description below for you guys. And yeah, I think that's going to be it for this episode. I hope you guys enjoyed it. If you did, make sure to like the video, subscribe to the channel, and hey, don't forget to share the content, okay? If you guys are really loving this and you're loving what I'm doing, then please share this content of financial freedom with you guys, or with anyone who's ultimately willing to listen. Guys, it's important. The whole reason we're doing this is to become financially free, to control the source of our income, so that no matter what happens, no matter what kind of economic crash is on the horizon, no matter what kind of troubles we're seeing in our nation, whether you live in the United States or whether you live in Europe, whether you live in Liechtenstein, Germany, Italy, Lithuania, it doesn't matter. The point is that every nation has instabilities, and every nation has economic crashes, calamities, and a whole host of other things. When you guys become financially free and you control the source of your income, you can make that income mobile. And when you make that income mobile, you can get up and move wherever you want. You can live wherever you want. You can decide to go on vacation whenever. You don't have to ask a boss. You can live your life on your terms. That is a powerful message. It's much more powerful than the message of going to college, getting good grades, and getting a degree, in my personal opinion. I did that. I really did. And it sucked. It didn't get me anywhere. Which is why I'm striving heavily to try and control the source of my income. And I would encourage you guys to do it because, honestly, it's the most empowering feeling I have ever had. It has given me purpose when I was, honestly, directionless. When I had no purpose. And it's given me something to shoot for, something to strive for, something I'm excited about. So guys, I feel like this is a very empowering message that everybody needs to hear. When I graduated college, I didn't know what I wanted to do. I had no idea. Actually, I didn't know what I wanted to do when I was in college. I ended up, after changing my degrees 7 times, I ended up landing on business administration because I was like, what the heck? I don't know what I want to do. Most college students don't. So I decided to, when I got out of college and I graduated, I started looking for jobs. And turns out having a bachelor's degree in business administration didn't mean a whole lot. And you know what I ended up getting? A job in a warehouse. Not any warehouse, but a warehouse that was not air conditioned, a warehouse that was freakishly hot in the summertime and incredibly cold in the wintertime. You're sweating when you're moving around, trying to pick up heavy boxes, heavy items, in the wintertime, and you're wearing all your sweatshirt and your long pants and everything. And so you're really, really hot when you're moving around. But then because it's wintertime, you actually get colder and colder as you end up sweating. And then in the summertime, because I was particularly working with some dangerous chemicals, I wasn't allowed to wear shorts, so I was actually even hotter. I couldn't wear comfortable clothing. There was no AC. There was maybe one fan. And guys, it was miserable. It's absolutely miserable. And for someone like me, I'm sorry, I don't mean to be arrogant, but I felt like I was too highly educated to be there. But I didn't know what I wanted to do. And I couldn't find anything better. This was what I found at the time. A bachelor. Now, I know there's a lot of other people out there who have a much better experience with having a bachelor's degree and going through college, but that was mine. Going to college didn't get me the life that I wanted. And in fact, it landed me into a lot of debt. And I cannot say that the return on investment was a good one. But becoming financially free and controlling the source of your income is. And you know what? The best part about it, you don't have to go into debt for it. If you're doing it online like I am, it's actually cheap. It's relatively cheap. It's relatively affordable. You want to be a trader? I'm going to start my account out with $3,000. Okay? That when I start trading live, that's how much money I've got put aside that I'm going to actually trade with. $3,000. You telling me you can't save $3,000? You got a lot of other problems that you need to work out. $3,000 is not that much money. Over time, you can budget for it just like I did. Over time, you saved up the money. And now this is money that I can risk, and if I lose, it's no big deal, right? Just like I talked about in the last episode, you don't risk money you can't afford to lose in the markets. So I budgeted for this. And now I'm going to have the ability to trade with $3,000. And it'll be very interesting to see how it all turns out. I'm super excited about it. But guys, again, you don't have to be wealthy to do this. But you can take control of your income today. All you have to do is make the decision. Make the decision that this is what you're going to do, and then start taking action. Action speaks louder than words. So, guys, that being said, again, if you enjoy this message, if you enjoy the content that I'm trying to do here, please share it. Get it out there. Share it on social media. If you're on Twitter, Facebook, Instagram, Pinterest, wherever you are, it doesn't matter. Share it. Repost it. Help me grow this community of individuals who all want to become financially free and to control the source of their income. And help me grow a community of people who all also want to become a consistently profitable trader as well. So if you guys know of anyone that'd be interested in that, and I guarantee you do, if you like it, someone else will, share it. And let's get as many people in this that are willing to listen to us. And let's change the world. So guys, if you'll do that for me, I'll see you guys in the next episode. As always, know the risks, plan accordingly. Have a great day.